Today's top stories at NBR: the warehouse's entry into the supermarket ring, more creep than Big Bang. Auditor General's inquiry finds concerns. The potential for new gold mining in the Dunstan Range. And there's more coming right up. Kia ora and welcome to NBR Today, 100% subscriber funded and proudly brought to you by you, as is every story at nbr.co.nz. It's Thursday, March 31st. I'm Paul Brennan. Thanks again for joining us. Air New Zealand hopes a deeply discounted rights offer price of 53 cents will attract investment from the eligible investing public as it seeks to finally throw off the yoke of COVID and refuel its recovery. The national carrier announced yesterday, Wednesday, it's finally launching a $2.2 billion recapitalisation, including a $1.2 billion two-for-one pro-rata renounceable rights offer. Trading in the airline shares was halted at $1.37 per share at 4 p.m. Wednesday in anticipation of the announcement of the capital raise, which has been delayed over the past year due to uncertain market conditions in consultation with the government. Speaking at a press conference Wednesday night, Air New Zealand Chair Dame Therese Walsh said the discount at which the new shares would be issued took into consideration other deals and discount rates that have been out in the market and with other airlines. She did not specify which airlines and deals had been referenced. The Warehouse Group has the right attributes to enter the supermarket ring in a bigger way to break up the Woolworths and foodstuffs duopoly, an analyst says. But the NZX-listed retailer is waiting on the government's next move following a ComCom report on the sector. Warehouse Group Chief Executive Nick Grayston said he was pleased there had been recognition that competition wasn't working and Kiwis were not well served by the grocery business. The retailer said it wanted to play a bigger role in the grocery sector than it does. Forsyth Bar Head of Research Andy Bowley said, "The way I see it playing, the warehouse is more creep than Big Bang." In breaking news late this afternoon, an Auditor General's inquiry has found concerns with the government's $290 million Strategic Tourism Assets Protection Program. The main concern was limited documentation on why ministers decided on the number of businesses to fund and why they didn't accept officials' advice to stop STAP or only fund a small number of companies. More at nbr.co.nz. The fees and costs charged by New Zealand's managed funds have broadly stood still, while many other markets have become cheaper following a shift to passive investing. Morningstar Data Director Greg Bunkle says, and some local fund managers are earning performance fees against what it considers to be an inappropriate benchmark, he said. Morningstar Thursday published the first part of its biannual Global Investor Experience Report, now in its 7th edition, assessing the experiences of managed fund investors in 26 countries, focusing on fees and expenses, and graded an investor's ongoing cost to own managed funds on a scale from top to bottom. It found median fund expenses across allocation, equity and fixed income strategies were 1.09, 1.30 and 0.59% respectively. More drilling and more capital will be required to determine the potential for new gold mining in the Dunstan Range south of Towers in central Otago. But ASX-listed Santana Minerals is talking up the possibility of a significant resource. Exploration permit owner Matakanui Gold Limited was acquired by Santana in November 2020 in an all-scrip deal from a range of New Zealand investors, including Warren Batt and a nominee company associated with financial advisor Chris Lee. Matakanui shareholders received a total of 38.2 million Santana shares in consideration. Shares in Santana have gained more than 400% since September last year, when Santana announced an increase in inferred resource to 643,000 ounces, and were trading Wednesday around Australian 57 cents, valuing Santana at Australian 73 million. Get the full details of those stories and more right now at nbr.co.nz. Tomorrow at NBR, in his column, Tim Hunter says Graham Hart has history to overcome in selling Carter Holt, while Rachel Smalley opines we should ditch the America's Cup chip on our shoulder. I'm Paul Brennan. Join me again from around lunchtime tomorrow for the morning's NBR trending stories. Then same time, same place right here from 5:30 for another NBR Today.